Gold just crashed 5% overnight, and Netflix just wiped out $20 billion in market value. Two markets that almost never moved together just collapsed at the same time. What's really going on here? This isn't just another bad earnings report or a temporary dip in gold prices. What we're watching right now might be the start of a chain reaction that reveals exactly how fragile investor confidence has become in 2025. Netflix, once the king of streaming, missed its third-quarter earnings target. Subscriber growth slowed, content costs exploded, and within hours, the stock plunged 6%. But here's the strange part. While Wall Street was dumping Netflix, investors also dumped gold, the asset people usually run to when they're scared. When both your growth stock and your safe haven start falling at the same time, something much bigger is happening beneath the surface. It's not panic, it's a signal. And in this video, we're going to decode that signal. Why gold dropped, why Netflix fell, and what these two stories tell us about where money is really moving next. Welcome to Mindset for Wealth, where we look beyond the headlines to uncover the real forces driving the global markets. If you're ready to understand money, not just follow it, hit subscribe, stay with me until the end, and let's break down the chain reaction shaking Wall Street today. The first domino, Netflix crashes. It all started with Netflix. For years, Netflix was untouchable, the streaming king that turned television into an app and made billions by knowing what people wanted before they did. But this quarter, the story flipped. The company reported earnings that missed expectations, subscriber growth slowed to its weakest pace since the pandemic, and content costs surged past $17 billion for the year. Investors had one question: if Netflix can't grow, who can? Within minutes of the report, Netflix stock fell 6%, erasing more than $20 billion in market value. Analysts tried to stay calm, but the truth was clear. Growth wasn't guaranteed anymore. The content arms race had caught up with them. New players like Amazon, Disney, and even YouTube were spending heavily, driving up costs and shrinking margins. But what really shocked Wall Street wasn't just the numbers, it was the reaction. The sell-off spread fast. Shares of Disney and Warner Bros. Also fell. Tech investors pulled back. You could feel the fear ripple across trading floors. And yet, the strangest part was this. Normally, when tech stocks tumble, investors run to safety, into gold, into bonds, into the US dollar. But this time, that didn't happen. Instead, gold prices collapsed the very same night. This wasn't coincidence. This was the first domino falling. A signal that the market wasn't reacting to Netflix alone. It was reacting to something deeper, a shift in confidence, a silent message from investors that the old playbook, buy growth, hide in gold, might not work anymore. Because when both Netflix and gold drop together, it's not just a sell-off, it's the start of a pattern. And to understand it, we need to look at the second domino, gold itself. The second domino, gold collapses 5%. While Wall Street was digesting Netflix's ugly earnings, another market was about to break. And this time, it wasn't a tech stock. Gold, the asset that's supposed to protect you when everything else goes wrong, suddenly crashed 5% in a single night. It was the metal's biggest one-day drop in nearly 5 years. For millions of investors around the world, it felt like the ground had just shifted under their feet. How could this happen? Gold usually rises when markets fall, but not this time. The answer lies in two forces, the US dollar and bond yields. As traders fled from risky assets like Netflix, they didn't move into gold. They moved into cash, specifically US dollars. The dollar index surged to its highest level of the year, and treasury yields climbed as investors demanded safety with returns, not just safety. When the dollar strengthens and yields rise, gold, which pays no interest, becomes less attractive. So investors sold it. But there was also something psychological going on. When Netflix fell, it wasn't just a stock going down. It was a symbol of slowing consumer demand and shrinking entertainment budgets, a small crack in the story of unstoppable growth. That same fear that the boom might be losing steam spread fast. So instead of moving money into gold for safety, investors hit pause altogether. They sold gold, they sold silver, and they waited. The second domino had fallen. The world's oldest store of value had just failed its biggest test. And now, all eyes turned to the third force in this chain reaction, The one asset that seemed to rise as everything else broke, the US dollar. The invisible force. The dollar strikes back. Every time a market breaks, there's one force quietly shaping what happens next. The US dollar. While Netflix collapsed and gold imploded, the dollar was doing the opposite, surging to its strongest level of the year. It didn't move because of hype or headlines. It moved because the world was looking for somewhere to hide. When investors panic, they don't always run toward gold anymore. They run toward liquidity, toward assets that can be sold instantly, anywhere, anytime. And nothing on earth is more liquid than the US dollar. Behind the scenes, traders were betting that the Federal Reserve would keep interest rates higher for longer. Inflation was still sticky, job numbers were solid, and consumer spending, though slowing, hadn't collapsed. That meant holding dollars actually paid off, thanks to higher yields. So global funds started pulling money out of commodities and even tech stocks, redirecting it into short-term treasuries and cash. The result? Gold sank, growth stocks like Netflix lost steam, and the dollar became the unexpected winner. But this wasn't just a temporary move. This was a rotation of power, a shift in what investors trusted. For years, the narrative was simple. Gold protects you, tech grows your wealth. Yet in October 2025, both failed at once. The only thing left standing was the dollar. It's almost poetic. The same currency people blamed for inflation and debt is now the one they run to when fear hits. But if money's running back to the dollar, where exactly is it leaving? That's the next domino, the great market rotation that's reshaping where the world's wealth is heading. The market rotation, where the money went. When gold falls, tech tumbles, and the dollar surges, one question becomes impossible to ignore. Where did all that money go? The answer isn't nowhere. Money never disappears, it moves. And in October 2025, it started moving somewhere completely new. While the headlines were obsessed with Netflix's losses, something else was quietly rising. The old school sectors. Energy stocks gained momentum as oil prices stabilized above $85 a barrel. Financials picked up steam as banks began profiting from higher interest rates. Even industrials, the backbone of the real economy, saw inflows not seen since before the pandemic. This was the Great Rotation, a shift from flashy growth stories to steady, cash-generating businesses. Wall Street calls it a risk rotation, but what it really means is this. Investors are betting that America's economy isn't collapsing, it's adapting. Instead of chasing hype, investors are chasing income. Instead of buying what's popular, they're buying what's profitable. The data tells the story. Gold ETFs saw outflows of nearly $2 billion that week, while the Dow Jones Industrial Average, packed with value and dividend stocks, hit an all-time high. It's almost ironic. The same fear that pushed investors to sell Netflix and gold actually drove them into assets that benefit from a stronger economy. The chain reaction wasn't chaos, it was strategy in disguise. This is how market psychology works. When fear peaks, money doesn't freeze, it evolves. Investors simply change their definition of safe. And that's why understanding the rotation is so critical. Because when the crowd is panicking, smart investors aren't just watching, they're already positioning for what's next. So what is next? That depends on what we learn from this chain reaction. Every crash, every sell-off, every sudden swing in sentiment tells us something. Not about the market, but about ourselves as investors. That's where the real lesson begins. The lesson. What investors should learn. Every crash teaches a lesson. Every rotation reveals a truth. And this one, the Netflix crash, the gold plunge, the dollar surge, exposes one of the most important ideas in investing. Money never disappears, it just changes direction. The first lesson is connection. The markets don't move in isolation. Netflix's earnings may seem like a single corporate story, but in reality, it triggered a series of reactions. Investors questioned consumer strength, sold growth stocks, dumped gold, and rushed into dollars. Understanding those links is how professionals stay ahead while everyone else reacts too late. The second lesson is perception. Safety isn't what it used to be. Gold, once considered the ultimate safe haven, failed to protect investors this time. The new safe is adaptability, being in assets that can survive multiple outcomes, not just one scenario. And the third lesson is psychology. Markets rise and fall on emotion, not logic. Fear creates sell-offs, but it also creates opportunity. The same panic that drove people out of gold and Netflix created new value in banks, energy stocks, and real assets. Smart investors didn't panic, they rotated. If you can learn to see fear not as a warning, but as a signal, a sign of where the crowd is leaving and where opportunity might appear, you're already thinking like the 1%. Because real wealth doesn't come from chasing trends. It comes from understanding how the pieces connect and staying calm when the chain reaction begins. The Netflix crash wasn't the end. It was the beginning of something bigger. It revealed how fragile confidence can be, how quickly fear spreads, and how smart money quietly adapts while everyone else panics. We just watched a chain reaction play out in real time. One company's earnings miss shook Wall Street, gold failed to deliver safety, and the dollar reclaimed its throne. That's not chaos. That's the market reminding us that wealth always moves. It just doesn't announce where it's going. So the real question for every investor right now isn't, what just happened? It's, where is the next domino about to fall? If you want to understand that before the headlines do, stay with us. Here at Mindset for Wealth, we don't chase hype. We decode how money really works. Because financial freedom doesn't start with luck. It starts with understanding. Thanks for watching, and remember, in every market storm, someone is learning, someone is panicking, and someone is preparing. The choice is yours. Subscribe, stay curious, and stay ahead, because this is where the world of money makes sense.